The mood continued to be pessimistic on world financial markets overnight as concerns deepened around Europe. First off, Moody's is taking the first steps in terms of downgrading Germany, Luxembourg and the Netherlands by reducing their outlooks from stable to negative. The primary reason? The continued uncertainty in Europe. In the meantime, Greece's creditors are on their way back to Athens to find out how far Greece has actually deviated from the terms of its bailout conditions. In the meantime, Greece's Prime Minister warned about the deepening recession in Greece. In fact, the Greek economy has contracted by something like 7% over the opening part of this year. Later, towards the end of the week, the Greeks are due to meet with the International Monetary Fund and the European Central Bank, and it will be very interesting to see whether those institutions will continue to back the Greek economy. So looking at markets then, the Dow was off by 100 points roughly again overnight, and most European indices were also down between 0.5% and 1.5%, so a little less than yesterday. In terms of currency, again, the Kiwi sliding against the US and surprisingly the pound, but holding relatively stable against the Aussie. Viewers will be aware that New Zealand's agricultural imports into the European Union are subject to a quota system. That quota system is designed, of course, to protect European farmers from the competitive advantage New Zealand has from its grass-based, low-cost pastoral systems. It may interest viewers also to know, however, that at this time we've only used roughly 41% of our 228,000 tonne lamb quota. This follows a downward trend. In terms of last year at the same time, we'd used around 51%, and in terms of 2010, around 59%. One of the key things that the European Commission has basically stated, though, is that in terms of the prices realised, they're only marginally down on what they were last year. However, this of course doesn't take into consideration foreign exchange rates, with the Kiwi currently monstering the euro and up relatively high against the British pound. Our Australian compatriots are also finding some trouble in terms of providing enough to supply the European quota. They're down to roughly 50% of their admittedly lower quota numbers. One of the key outtakes is, of course, that this low importation is down predominantly to the ongoing European debt crisis. However, the fact is also that consumption of lamb in the European Union is not actually increasing. What these numbers graphically demonstrate is the need for New Zealand processors to actually develop alternative markets to our traditional European ones for lamb.